Hello everyone, right now is April 27th, 2019, Saturday, around 5 p.m. here in New York City. So yesterday, Friday, both the S&P 500 index and the Nasdaq index made a record high on a closing price basis. So in this video, we're going to examine what's the short-term, medium-term, and the long-term implication of such a remarkable event. Okay, so let's get right into it. Right now, you're looking at SPY, S&P 500 ETF, and we're looking at the daily chart, weekly chart, and monthly chart. So we're still using the same analysis system, which I developed. It's called Pendragon 321. 3 stands for 3 price lines, 2 stands for 2 sets of trading signals, and 1 trading indicator. So, what stands out first of all is that yesterday's price action only occur toward the very end of the session, because throughout the day the market was not really going much anywhere. Only toward the end of the trading day, all of a sudden the market catapulted higher and made a new record high. And this record high, so-called record high, is actually quite curious because only 2 out of 3 major indices, both the S&P 500 and Nasdaq index, made a new high on a closing basis. The Dow Jones Industrial Average, however, did not join the 2 indices, and that itself is quite unusual. Okay, so what do I expect to happen on a short-term basis? If we examine the chart, what most likely is going to happen is that I expect the market to make new all-time highs. So not just the closing high, all three indices, okay, the S&P 500, Nasdaq, and the Dow Jones Industrial Average should make new highs. Okay, and what's going to happen in the coming days is that the market is going to pull back. And when it pulls back, most likely it's going to reach the either the green number or the pink number. I think the purple number at this point is too far away for it to reach. So it most likely be the green number or the pink number. And these 2 numbers, if you email me, I do send out these numbers on a weekly basis, so you can get my price charts among many other stocks. I send out currently probably over 100 stocks or these price line levels. And once they reach the correction, and I expect the market to continue slightly higher. So this shape is the most likely scenario. Now, why is this also a high probability event? Because if you guys look at it, if you look at the market, as mentioned before, these price lines act like magnets. They attract the price toward its level. Okay, and you see right here, it touched the green one, couldn't quite touch the pink one, and it went up. Okay, and down here, again here, that's about a month ago, it reached the green line, it touched it twice, could not break it, and went up. So right now, it's been about a month now that it hasn't touched the green line at all. It hasn't corrected the green line at all. In fact, it's still some nice distance away from it. That in itself is quite unusual. So therefore, I expect in the coming days, the market should correct, pull back, and touch the green number. Okay, that's what's the most likely scenario in a short-term basis. Now, on the medium basis, we're talking about beyond the next few days or couple weeks. We talk about the next maybe month or so, a few months or so. There is a well-known seasonal pattern and saying in the market. It's called sell in May and go away. Okay, sell in May and go away. What does that mean? Usually it means that you should sell your stock in the month of May and go away for summer vacation and then come back to the market and buy again around, let's say, September, October, because traditionally if the market is going to drop, September is probably the worst month for the market, and October, sometimes even though crash happens in October, but October is also when the market stage it's a V-shape, recovery or bounce. So that's why usually people will say you sell your stock in May and come back to buy it in September. Now this year, could this happen? Well, actually, there's a very strong possibility for this to happen this year. Why? Because simply put, if you look at the monthly chart, we all know since the end of last year, actually from December 26 or December 27, right after Christmas, the market has been going pretty much one direction, which is up. Okay, And, nothing really goes up forever, and from time to time market will correct. So it's a very strong possibility that May could be a short-term top, okay, and the market will correct downward somehow. Okay, so that's our most likely scenario. Now, there are three possibilities that the market could happen, in May and a subsequent few months. Number one, like we said, you would just correct, pull back, okay? Another thing is that the market could be going in a trading range, could be trading in a trading range. Now, the first two possibilities, the pullback and the trading range, these are very high probability events. I am giving them at this point a combined probability, let's say about 80% chance. Okay, so 80 to 85% chance, that's it. Let's say 80 to 85% chance I'm expecting the market to be either in pullback or trading range event. Now that leaves the third possibility, which is a low probability event right now. That's about 10 to 15% chance of happening. That is, the market continue higher without any substantial pullbacks or trading range adjustment. That is a very low probability event. Nevertheless, it could happen. Okay, so I want us to think about, what if that's indeed what happened? What if market defied all logic and continue higher throughout May and in the summer month? What signal does that send us? Okay, that's something for us to bear in mind. Okay, if that does indeed happen, then it's something very interesting. Okay, so now let's go to the long term now. On the long term, we're going to go to the monthly chart. Back on March 2nd, I did a video. It's actually on the thumbnail, the title is called "The New Bull is Here." It says 100 years of stock market history. This video was done on March 2nd, 2019. I will put a link in the description area so you guys can look at it if you want. So in that video, we was basically we analyzed 100 years of past stock market history and try to say that because see if it's a V-shaped recovery. Now, as stated before, the most likely scenario in a short-term basis is for all three stock indices to break through its all-time high, not just the closing high, all-time high. Now, when that happened, that is the final nail in the coffin, or the final official confirmation that we need that the previous, whatever happened in the end of last year, started October, what you want to call a correction or a near correction or a bear market, what have you, that would be over. We have officially a V-shaped recovery. At this point, it's almost a foregone conclusion because the old high are so close now that they're going to be broken. And we're going to be entering a new multi-year bull market based on the past 100 years of stock market history. Okay. Now, you might ask, how could that be so? Because we all know, come July 2019, that's just merely 2-3 months away from here, from now. The current economic expansion, along with the current supposedly bull market, the market going up, will be the longest in history. And a lot of people are expecting that, the history not to continue further along that. We should, this expansion of the bull market should end. Okay, that's one way of looking at it because we're based on history. Now, another side of argument is this. Back in 2008, with the collapse of Lehman Brothers, the world financial markets and the entire world economic system, okay, not just the US, the entire world economic system was on the verge of collapse. Okay, and very few people realize this, but if you go back in the history right now, the entire world economy, not just the US economy, borderline on the total collapse. Okay, that means game over. That was it. No more. Okay, and throughout the efforts of the coordinated global central banks and a whole bunch of political entities, everybody doing a lot of stuff, pumping money, some of actions to continue to this very day, such as negative interest rate policies, that we finally well, let's say we finally rescue the global economic system from the brink of abyss. Okay, we rescue that. So basically, the analogy you can think about is kind of like back in 2008, about 10, 11 years ago, if the entire global economic system is a human being, this human being got very, very sick, almost terminally ill to the point of losing its life. Okay, it's hanging by a thread. And for whatever reason, whatever thing we did, we give this a miracle drug or something you want to call it, okay? Somehow we saved this patient, which is the global economy. Okay, we bring the patient back from the gates of hell. Now, although the patient is cured, okay, the patient no longer, the disease is cured now, no longer going to die anymore. However, the patient is still very, very weak. So for the next 10 years, which is the global economy, the patient is slowly being recovering. So in the recovery phase, you cannot consider a bull market or a bubble phase. It's merely a recovery phase in the entire long-term history. Because last time when we had 2008, this crisis is actually comparable to what we experienced back in the 1920s, the Great Depression. So the subsequent recovery, it's not really bull market at all. It's precisely that, just recovery. So it's not really a bull market. So viewing from that point of view, all of a sudden it could make sense. If you look at for 100 years of history of stock market, if we indeed broke through new highs in the coming days, the V-shaped recovery is confirmed. The new bull market started, and usually, as we mentioned in the last video, usually this bull market will last for a few more years. It's not just going to be the moment it touched and the market collapsed. It hasn't really happened in 100 years. Can it happen? Sure, anything could happen. But thus far, it hasn't happened in the past 100 years. Okay, and what's even more interesting is that one of the reasons that was attributed for Friday's bullish action was because the U.S. GDP came in at 3.2%, growing at 3.2% versus the 2.5% expected projection. That is a very strong economic performance for such a large economic entity, for the size of the U.S. economy, for, such a big economy. Okay, so that means U.S. economy is actually quite hot at this point. And another thing we want to consider is that when we're thinking about long term here now, next year, 2020, is a presidential election year here in the US. And the presidential election will take place in November of next year. Right now, let's say we are May already. Okay, next week will be May. We only feel that we're less than a week from May. From May of 2019 until November of 2020, we have about at least another year and a half to go. Okay, another year and a half to go. So that is quite a long time. If the economy is growing still at this great pace, this red hot pace, and there's another, speaking about the well-known market patterns. Usually on the election year, the economy and the stock market do well because the incumbent party, in this case the Republican Party, before it could be Democrat, they try to keep the economy strong. So the incumbent right now is President Trump, in the Republican Party, so they can be reelected. Okay? So we have a President Trump, that like to talk up the stock market and economy. And let's do a mental exercise here. Let's say he succeeded. And for whatever reason, he actually succeeded. From now on, for the next year and a half, the US economy still grow on this red hot pace. Can you imagine what the economy is going to be like? If right now we keep on growing, both the economy and the stock market, the price keep on increasing from now on until November of 2020, what would happen? So is this the beginning of a new bubble forming? Or it's an eve before a big collapse? Okay? That's something we want to consider. Now, another saying in the market that's very famous. It's some people call it the 4 most dangerous words in the market. This time is different. Okay, this time is different. Usually, when we say this time is different, that applies to a bubble. Because every time when the market's in a bubble, they always, some people, pundits or people come out, analysts come out to say, well, this time is different. That's why the market can continue going higher and higher and higher, never correct, because when a new economy, new technology, new this and new that. Okay, this time is different. And as we all know, so far, okay, every single time, it is not different. Okay, it's never different. So I want you to consider another possibility though. This time is different does not just apply to the bulls. It also applies to the bears as well. I know a lot of bears are looking for the market to collapse right now. But if we examine the past 100 years of stock history, as we did a month ago, okay, if indeed, okay, again, this is another if right here, indeed, we broke through the, all three indices in the coming days, broke through its all-time highs, then the new bull market has been confirmed. Okay? So this time it's not going to be different either. It's not, because if the new bull market is confirmed, it's going to be a multi-year new bull market. So it's not going to be different from before. Okay, it's not going to suddenly enter into a bear market. So that's something for us to consider. So in that sense, history actually is on the side of continue stock market making new highs. How high, we don't know. Okay, but it is, at least we are not going to enter a bear market anytime soon. Okay, that's what the history is telling us. Whether it happened or not, we don't know. We're just going to have to see. So the most important thing right now is that we are not a bull. We are not a bear. Okay, we are market opportunists. We're going to, I have laid out in this video the cases for both sides. And we're going to take both cases. We're going to be prepared for them. Okay, so right now it seems like it's a more higher probability event that the market might go up. So we're going to trade for that. Now, I've also laid out the case for you for a very unlikely case of a bubble forming. If right now, let's say we are having another bubble, just because we're having a new great bull market, a bubble market, what have you, I want to caution you, because I started trading back in 1993. And I was the full participant in the late 1990s stock, .com, NASDAQ, technology, stock market bubble. Even during those kind of environment, there are some stocks, some companies that actually do go bankrupt, and their stocks went to zero, even in the late 90s. Okay, those events do happen. It is not impossible. So nevertheless, so it's not just because because when the bubble happened or when the bull market happened, a lot of people are going to get caught. People are going to get caught up in this new mania. And I want us to be, pre-planned for that. Okay, I want to be forewarned for that. So we're not going to be a permanent bull or permanent bear. We go where the market goes. Only thing we're going to lean on is to have strong discipline, and we're going to formulate trading plan. Every time before we do anything, we're going to plan our trade, and we're going to trade our plans. Okay, so those are what's the most likely event on both, on the short-term, medium-term, and long-term basis. And my email address is panlong321@outlook.com. If you'd like to contact me, get those price tables or discuss the market or anything, you can leave me a comment in this video, in this channel, or email me. Okay, that concludes this week's presentation. And the coming weeks, we're going to be continuing to follow this market and see if any of our forecasts come true. All right, take care. Always trade with passion and trade with discipline. I'll see you guys next time. Bye-bye.